Hey, welcome everybody. Chris Franks with TexasWest Capital. Andrew Parrish from Arch Public and Tillman Holloway. You know, BTC with all the fixing, he says, and he's dressed like he said it. So good to see you guys. How are y'all doing?
I'm great. How are you guys doing?
I'm trying to figure out if all the fixins is a reference to Eastbound and Down or not. If it is, I'm impressed. If it's not, then okay, fine.
Just pretend it is. Just go with it.
Listen, it's because I'm born and raised in Texas, and we have potatoes with all the fixins.
Yeah, that's right. That's right. Well, it would be immeasurably funnier if it was Eastbound and Down, because the way that he says fixins.
As always, y'all get, a little bit, if you didn't know, about some TV shows and some movies and things here as well. You do yourself well to pay attention and look it up for yourself.
Yeah, I think
to start the show off with a bang, Morgan Stanley's Bitcoin ETF is about to launch. They got an official listing announcement from the NYSE, so that thing is about to take off. And I mean, guys, that's a big deal. Morgan Stanley is not going to be encouraging people to put money into IBIT anymore. They're going to be encouraging people to put into MSBT. And when you have a reminder that Morgan Stanley is not an ETF company, they're
a sales engine company.
Yeah, they don't have a whole lot of other ETFs. That's not their business model. That's not what they do. So this is pure demand, right? This is people are asking for it. We see huge amounts of inflows going into these products. We see more people asking about it, so much so that we're taking steps as a corporation from a regulatory standpoint to create an in-house product. I can't stress enough the fact that Morgan Stanley does not actually have a lot of in-house wealth management products. That's not what they do. Yeah. They have shelves and shelves and shelves of...
They're a sales entity.
Yeah, they have purveyors of product, and they may like one or the other, but very, very, if you go to somebody that's got, $7 million long at Morgan Stanley, they don't have Morgan Stanley product in their accounts like a JP Morgan client would. So it's very
well. I'll boil it down from the layman, non-traditional finance realm, which is
talks about fixins, right?
This is layer 2 in the food chain of adoption. Yep. We had layer 1 people who were infrastructure based. This is offering based, and those are different motives, right? But to have sustainable business models on both fronts speaks to the industry and how flexible it is as it pertains to where you fit in, where you can get in, guys. That's really what the message is however you need to incorporate Bitcoin into your personal strategy or into your business strategy from a balance sheet perspective. That is what the signal to me is. That is what I hear when you say that. And kudos to even some of our employees. Daniel, he raises, I guess, some rare
Scotland Highlander cattle.
I was waiting for you to fill out some rare cattle, and it's really good. And he's now selling cattle in Bitcoin. So just incorporate it, because everyone is, including Morgan Stanley, which is. They have no reason to, other than the demand, like Andrew said.
Well, and I think, as big, I think, a story as that whole Morgan Stanley thing is with Bitcoin ETF. I think the bigger story is that Bitcoin has become so much of what it's become that they are doing that, right? I mean, it's big enough that they're doing it, but the very fact that Bitcoin has risen to that level where they've felt the need to do that, I think is even bigger. And I say this because everybody's still freaking out about price, right? Everybody's still, oh my God, Bitcoin's dead. Is it dead? All this stuff. The same thing we hear every single cycle. And yet, if we look at this cycle, the adoption and the way it's being adopted and the different avenues, and again, going from, like you said, you had your phase or your stage one there, and then you have this other level now. I mean, I think it just speaks really to just how significant Bitcoin is and how much more significant it's going to continue to become.
Yeah, I think that this Morgan Stanley Bitcoin is one of their first actual Morgan Stanley started and then moving forward branded ETFs, because they only have 21 ETFs in house, but those all came from acquisitions that they did. So they bought Eaton Vance, Calvert, and some company I've never heard of called Parametric. And this is 2023 that they did this and brought those in house. So again, this is not what they do. And so this goes to demand. This goes to where they think demand is going and where the scale of the Bitcoin financialization economy is going. It's going up. And listen, we talked about this on Melker's show yesterday. Yesterday. That everything that's being built in a bear market, presupposes that at some point there's going to be a flashpoint 3 months or 6 months or 2 weeks or whatever it is over the next 2 years where we just go meaningfully higher. There are so many headlines about everything being built: tokenization, real world assets, Bitcoin ETFs, Bitcoin this, Bitcoin that. BlackRock won't shut up about crypto in some way, shape, or form. And then, Securitize, which handles BlackRock's BUIDL portfolio, is now going to handle all the tokenization for the NYSE and the associated companies. That just got announced yesterday.
Well, and OKX is in that mix as well. They also tied in now with ICE and with the NYC and NYSE and all of these things are being connected because 24/7 trading is just thinking about that alone and the infrastructure that's needed to be built and integrated. It's mind-boggling, and you're seeing that be the race that everybody's running right now at a fever pitch pace. I will tell you that, like, the people who are complaining about price right now, I was thinking about Warren Buffett and his method for investing and why it's so bulletproof. And it's the age-old saying that's like the simplest explanations are typically the truth.
Yep.
You have to ask yourself, a guy with that much money, that much access, that much everything, right? He could have dabbled across every market. He could have dabbled across, speculative short-term plays, day trading, all of the above, quant trading. But he knew something, I think, that he didn't tell us with his words, because you can't say it without sounding a little crazy, which is like short-term, trying to time the market short-term is a sucker's bet. And, anytime you're in this mentality of like, oh, the price, that's the emotional state that is designed to pull you in. You have to look at the signal, right? And the signal is growth metrics. And what, we just said as it pertains to Morgan Stanley, I mean, there is no stronger growth metric that I could point to than them offering this. And the access and the onboarding, whether it's paper Bitcoin, real Bitcoin, or whatever, the education alone and the amount of times people say the word Bitcoin now, what's the frequency going to be? Is it more or less? Well, I would argue it's going to be a heck of a lot more. That word is going to be rolling off a lot more lips. Yeah.
And I think part of that, especially with crypto, is just that it's still relatively young, up until just, this last cycle, we've really had, everything making really quick, big moves, parabolic moves. And so a lot of people that are in crypto, a lot of people on the retail side, this is their first entry to markets at all, right? They didn't, like us, they weren't in stock market, 15 years ago, where you went, oh my God, I'm getting 10 or 15% year after year, and I'm feeling pretty good about that. they're upset if it's, if they're not getting 50% in a day. And I think that goes a lot to it. But I think this is part of that whole bigger thing we've talked about so many times on the show, where as things are advancing and we're getting 24/7 and, people have money, what they do with money and prices are going up. So people are trying to make their money, make more money in prediction markets. And, it just kind of continues barreling forward with all this. And so I think it's a great thing that we kind of step back here and we say, hey, listen, you don't necessarily need to do this for alts, but for Bitcoin, step back. Step back, look at how it's looking overall. Look at look at the larger structure. Don't get stuck on the day-to-day. Yes, you can make money trading it, but the problem is people get into, they want to trade the smaller daily movements, but their thought is still in that larger time frame. It's still in that yearly time frame. And that's where you end up losing money, right? So I think with Bitcoin, again, this is something I've been talking about for quite a while. Bitcoin is one of those things that I think, unlike all the rest of the alts that promise you the world, Bitcoin is the one thing you kind of put some money in and you go, okay, I'm going to see how this looks in 5 years or see how this looks in 10 years. And you just keep adding to it versus, jumping on, I don't know, Algorand or XRP. People are going to hate me when I say that, but, and thinking that it has to have some life change.
Well, I think what you're saying is the truth is most people go to alts because they want a shorter time frame of success, right? And that again is like that's a risk curve, right? And so the steeper the curve, which this industry has an incredibly steep curve, the more risk you're incurring, and that's what those projects have. Now, I will tell you this, if you have a lot of dry powder and you have no exposure, I think there is a case to be made for putting a small amount of money in kind of the top 10 coins, if you will, and betting on the industry. I would look at that as a very similar approach to like a new financial market and betting on the mutual fund of the top 10 leaderboards. It may not flesh out, but even if one really starts to dominate over time, you're gonna be okay in that type of an allocation as well. I wouldn't argue with that.
But I think it's definitely, and I think you're right, but it definitely is not a first thing you do.
No.
And I think, Andrew, you would agree with that. When you get out there, you want to focus. Your first thing you want to do is focus on the thing that has the greatest chance of making you money, not the greatest chance of making or not the thing that has a chance of making you more money in the short term. That should always be second. It should always be extra money that you have, because as Tillman just said there, it's not just in crypto, it's anything you're doing. The greater the possible return, the more risk you necessarily have to take on. It's required.
Well, listen,
the more you feel safe in those situations, the more you've been duped by somebody, in my experience.
Look, the industry, our industry, the crypto industry, is dramatically changing. Like right before our eyes, it's dramatically changing. The people that were here 2.5 years ago that were the superstars of the meme coin craze are gone. They're no longer here. They don't have anything to do. The NFT exchanges have all but shut down. Almost all of them have actually shut down. The meme coin, pump funds, the volume on those things are next to nothing. And even something as, pop culture, right? So last week, there was a Vanity Fair article that came out with supposedly some of the true believers in our industry. And even that got mocked. And it wasn't even wildly, overly crypto, completely overwrought. It was just like, this is still kind of unserious. And this industry is starting to get pretty serious. It's in the halls of Congress and the White House and regulatory bodies. The regulators are serious about it. BlackRock's serious about it. Morgan Stanley's serious about it. So even the Vanity Fair article and the pictures with it looked just kind of stupid. Like,
well,
this,
I think that's indicative though of like the baby in with the bathwater, if you will. If you think about the variety of different mechanisms that are represented in the blockchain or the crypto space, from proof of work to proof of stake, and then everything in between, oracles, you name it. I mean, you can get down rabbit holes where you know that tree has hundreds of branches on it. Okay, but we all just go crypto. That's a real naive, very baby-esque way to look at our market. And it's not predicated on utility. It's not predicated on real use case or, you know, application potential and all those things that we should be, you know, deep in our analysis, especially with AI. I mean, they can literally spoon feed you this information with simple questions, queries like, can you explain to me the difference in settlements between the different chains? And then, you know, read the Cliff Note version. But those types of things are going to show you that they're very different, very, very, very different. Their applications are very different. Their intentions are different. Their use cases are different. And so what I believe we're seeing, without saying it, is Bitcoin rising to true utility. The world as a whole, including Wall Street, including the maxis, including people in, you know, impoverished countries that are using it to break away from their system, like all of the above can unite around one fact. And this got you some use case to it. Like, I'm using it for this, or you're using it for this. I remember some of the stupid use cases that I used it for in the very beginning. Wasn't as stupid as buying pizza for, I don't know how but it's still stupid reasons, you know. But I think we all now have agreed that it has utility, right? And so that utility is, we can still argue about what's the primary utility. Well, I think it's different for different people. Like Larry Fink's utility is very different than all of ours, right? Yeah. And it always will be. And so the fact that it can offer utility to that broad of market is the thing that we should be focused on.
We are moments away from utility being defined probably for the next decade, with Bitcoin being primarily two things: a store of value, and you can connect a lot of different things to store of value. Like, ever since the war started, Bitcoin's up, everything else is down. A store of value from the world's coming to an end, and now my bank is gone bust, but I still have Bitcoin on my ledger in somewhere. A store of value, right? Also, the other thing that it's about to be, and it's about to be in spades, is collateral. Collateral, right? So your house provides you a lot of things, right? All these things, you live in it, you have a life in it, you know, it's where you come back to, it's safety, security, all that stuff. Also, collateral. So I think we're on the precipice of Bitcoin. You know, really, those are the two things. Those are the two things that it is in a meaningful way on a go-forward basis. And by the way, it's probably going to end up being better collateral than your house.
Well, it's way better collateral. It's instantly, you know, repossessible. Right. All the things you can have a smart contract govern the terms of the loan and not have a pure person sitting behind a computer going, "You're late. Can you pay us?" Yeah, all that stuff. Just
right. And per the collateral issue and what you said, it can be called or can be taken, or, you know, whatever
mutually governed, like, there's all sorts of,
you know, everybody you know, people that don't understand Bitcoin, and by the way, that's not financial institutions anymore, they figured it out. They're like, wait a minute, this is great collateral because every transaction is on a blockchain. I don't care if this person tries to actually go hide their Bitcoin somewhere, it's on the blockchain. It's right there. We can find it. We can go get it, right?
Well, if you have smart contracts governing it and smart wallets with dual signatures and those types of things, you literally control it. But it's not unencumbered control. It's not, you know, the control that gets people in trouble. It literally is governance in a body, in an organization. And I urge, if anyone wants to see what I'm talking about in real world, and this is not a promotion. We do not get paid for this, but I'm a nerd. I love learning things. Go to bitco.com and open up an account with them. They have the snazziest wallet management system I've ever seen, where there's hot wallets, there's wallets connected to exchanges, there's wallets where you can receive, crypto and it'll sweep automatically into USDC. You can program. It's phenomenal, right? But the flexibility that it gives you from a management perspective is just unreal. And once you delegate those policies, you can then trust that the organization is bulletproof from a neglect and from abuse and from, all of those things, because there's just so many checks and balances. There's so many, contingent backup plans, if you will, for it's phenomenal. And to be able to do that and not have to explain to a room of 50 people, here's what we all respond, it fast forwards business very, very quickly. And I would urge every business that's thinking about taking crypto in to go talk to those folks, because they literally have built the platform for that purpose, to make that easy. So
I was thinking, not even just as straight up collateral. I mean, I think Bitcoin just as collateral is great, but what if you get companies that start really fighting for that business? They go, hey, listen, you can use it as collateral, and what we'll do is we'll split the difference of the value that it increases while it's there. Maybe, I don't know, they set up there where they're like, hey, listen, bring it in, and not just does it sit there, but we're going to split on that somehow or something. I mean, because Bitcoin rises in value, there's so many little things, little tricks that you can do with it from a lender standpoint to kind of, enhance your use of it, so that it kind of entices you to use them instead of somebody else.
Well, I mean, think about Michael Saylor. If you just took what he's created and you put it in the form of a DEX and product offering, you're going to get business. Like it's not that hard anymore, guys. It's like, find a way where the real world uses other collateral and put Bitcoin in that spot, and you got a business model, literally. And that's what is Michael Saylor able to borrow money on the back of? The promise of buying the collateral that they've agreed to buy, which is more Bitcoin. That is literally his entire business model summed up in a little small nutshell. It's like he has a sterling form of collateral that he's identified as being the best collateral, and he's using a debt mechanism in the form of a convertible note to raise an seemingly infinite number of dollars to transfer into that collateral. I mean, that's beautiful. I mean, it's
amazing. I mean,
people that are, and again, there's a meaningful subsection of folks in Bitcoin that are, just anti-Wall Street, because that's sort of the genesis of Bitcoin in and of itself. In fact, it's probably the funniest thing that I like about there's a subsection of people that will comment on my post when I talk about BlackRock or Morgan Stanley, whoever, and they'll call me a bootlicker. And then inevitably in their profile, they'll have like a Nostr profile. So I'll know that they're like, a hardcore Bitcoiner. But you can be like that, or you can just understand reality too. Like there are.
That's no different than hypocrisy. Like blackjack. I play blackjack, but I hate gamblers. Okay, well, I don't know where you find the delineation, but right. No one else finds the delineation there.
Well, it is. So that thought process is because Sats McGee just made a great point. Collateral will be a biggie because you won't have to ever sell it. You just leave it for your kids. You can constantly borrow against it. It's no different than securities-based lending. Right.
Well, it's no different than what we've been doing with real estate, but there's no carry cost to real estate. There's no taxable event to real estate. It has much more scalable potential than real estate does, because the service requirements of real estate start becoming problems at scale.
So point is that bootlicker guys are not thinking about it in probably the most right way. You have the ability to take advantage of what is available to you, across a spectrum of opportunity, lending against that asset. And what it does from a tax standpoint is a huge benefit, a massive benefit to you personally. Now you can decide to say, I'm not going to do that. I'm not going to take advantage of that. Oh, okay. But just understand that you're leaving a portion, a percentage of opportunity to the side for philosophical reasons. And that's okay.
Well, and it's always about what portion of it is against, borrowing is dangerous, and borrowing against volatility is even more dangerous. And so there are ways in which this can really burn you. So understanding this and understanding the ratios is paramount, and only you can determine what your ratios look like based upon your risk tolerance and the proportionate of invested dollars to your net worth, right? But I will tell you, there are a lot of people that reach out to us at Arch Public thinking we're Arch Lending. So we know there's a lot of people getting loans on their Bitcoin out there just because of mistaken identity. But the point is, there is a collateral here that I think is becoming increasingly desired at a institutional level. And I think that the future is very bright as it pertains to the interest that you could earn in that placed collateral. And I think that ultimately, if you really want to talk about, the USDC earned rates of deposit and all that stuff, there's no argument about this in Bitcoin. So, this may be really good for Bitcoin, because if you're holding Bitcoin and you let a bank hold a portion of it as collateral against a loan, your loan rate may be lower than any rate you could get if Bitcoin is in that picture. You may be able to buy your rate down because Bitcoin is such sterling collateral, is the point, which would be, money in your pocket is the bottom line.
And money in the pocket's always good. Speaking of money in the pocket, I kind of teased there with the headline, Bitcoin's facing a showdown with a $14 billion options expiry here in 2 days. I believe it's on the 27th. And I believe that's Deribit options expiry there. So for anybody that's really interested about that, the current put call ratio over there is about 0.63, which is balanced, slightly bullish. And so there is still a lot of heavy call selling though. Resistance up above, current levels where we're at. So, it's not like it'll instantly just pop on out through there, but the fact that, Bitcoin continues to hold up here with everything that's going on with Iran, with everything that's going on there, with Trump's tweets left and right, which, knee-jerk reaction move markets left and right, and everything else is really kind of taking it on the chin for the most part. So I think that says, a lot of, I guess, near-term goodness about Bitcoin. And we'll see how it goes. But at the end of the day, guys, we're still just kind of sideways here still. If price does rally through and get through 80,000 and whatnot, I think a lot of people are going to get caught flat-footed because they've been convinced it has to go down lower. But, again, and I think Andrew can attest to this, the ETFs right now are soaking up a ton of selling here lately. And so,
in the last 30 days, there's been 2.5 billion that's gone into ETFs. 2 billion of that has gone into IBIT, right?
They have a line on endless capital. It's crazy.
Yeah, it's what I made the point yesterday that there's been a lot of quiet quitting on crypto Twitter where people are just I've had enough. Or actually the quitting has been more loud than quiet because they make an announcement that they've had enough. But at the same time, who is picking up all of their bags? It's boomers. Boomers are picking up their bags and happy to do it and shoveling more money into IBIT.
And boomers aren't arguing about different Bitcoin improvement protocols that are coming. Yeah. And big boomers aren't arguing about self-custody. Bitcoin aren't they don't care. They're like, yeah, BlackRock wants to hold my Bitcoin. Great. Here's my money. Yeah, buy more of this. If you can't see that as a more slippery slope than what we've been doing as an industry in terms of onboarding customers, we're as fragmented of an industry as I've ever been a part of. Like, if you call yourself a Bitcoin, it means 100 different things to 100 different people.
Yeah. And I think you were right earlier with what you said. Even though you were directing it toward, markets and whatnot, where you said simple is better. I think that's pretty much through life, right? We tend to try and make things really complicated. And I noticed this in trading before I ever really noticed it in life, and myself as well. Do what?
He just
I didn't say that.
Oh, and so when you look at it, it's really kind of crazy because as human beings, we tend to want to make things more difficult. And I think it's probably because it makes us feel superior. It makes us feel smarter, makes us feel bigger. But trading, markets, life, simplest is most often the easiest, best way to do it. And, with your comment about boomers there, they're like, I don't know, I just put it into IBIT. It works out pretty well for them.
3 years from now, the second largest Bitcoin ETF is going to be Morgan Stanley's Bitcoin ETF. They'll never catch BlackRock, but they'll be the second largest one. The reason is because they are the biggest wealth management organization, the biggest bank, and people don't know this, but because I used to be in the industry, I do know this. They have the biggest cadre of advisors. They have 16,000, but more so than that, they have the most successful advisors. They're the top end of the wealth management space. Okay. And so those advisors,
liquidity, more money.
On average, those advisors are doing 2 to 2.3 million a year in revenue, an individual advisor. Whereas at an Ameriprise, the average is 600,000. Or at Edward Jones, it's 400,000. Or at Merrill Lynch, it's 1.7 million. Right. So they are the most successful. It is, kind of seen as the gold standard in wealth management is Morgan Stanley. Now there are downsides to that because it's an organization that's not quick to move on one thing or another, but it is the biggest, and those advisors on an average basis are running the most money and making the most money because they're working with the biggest, largest types of customers. And so it's a bigger deal than we're even trying to reach.
It's a huge reservoir of liquidity that's being piped into our industry, which is, it's new water. It's fresh liquidity. It's awesome. Because like you've said on many calls before, people who have their money with Morgan Stanley in the high net worth division, they just do what the advisors tell them to do.
That's why they're there. That's the whole reason that they're there. So think about it this way. Like 15 years ago, securities-based lending really wasn't a thing. Now imagine if you had 2 million long with that advisor and you were 51 years old. So you're doing pretty good. And now you're 67 or 66 years old, you've retired. Now you have 8 million long. And during that time period, that guy or the team that he leads has figured out ways for you to basically not spend any of that money, have huge tax advantages, and to live off of the securitized loan that they keep offering with you. That is enormous value.
They are the reverse mortgage provider of your equity value. They will keep giving you cash out because they're giving you less cash than the growth curve is in, and then it's a beautiful model because it incurs more fees, interest payments. It's good for the consumer because Andrew's all the points you mentioned earlier, tax benefits. You don't get charged taxes on loans. So If you're borrowing money, there is no taxable event, and the interest you pay on that loan is a write-off. It's an expense, right? An interest expense that's a taxable advantage. So it's say what you want. It has a lot of utility to the world.
So I'm curious here. We know how Bitcoin's doing, the Bitcoin ETFs. I'll be honest with you guys, I have not been keeping up with the other ones, XRP and all that other stuff. Solana, I think's got an ETF out there, right? There's a Solana one. You guys know how they're doing comparatively here?
Not surprisingly, the XRP ETFs have been doing better than all of those. Why? Because the XRP community are rabid fans of XRP. We work with people that are XRP folks at Arch Public, and more than any other community that we work with, they will tell us, I don't ever want to sell any XRP. I don't care what.
I don't want any dry powder.
I don't want them to ever sell. Don't ever sell any of my XRP. Let's find ways to get me more XRP with the XRP I have. But so, ergo, that ETF, no matter that XRP is down 40 or 60 or whatever percent it is, there aren't any outflows because those are all XRP people like supporting XRP via the ETF. Solana's struggled, right? Solana's struggled. Ethereum has held up okay, but Solana's really struggled. It's not gone well for those ETFs. But again, such is the nature of new ETFs, and especially when they launch right at the tip of the bear market. That's
I'd say Solana is actually doing pretty well, considering volumes probably down 95%.
Yeah, that's true.
Like your utility dried up. The problem, none of those markets that they were dominating, like all the meme coin markets and all the funny business markets, like those don't exist anymore.
I saw a statistic maybe 2 days ago from one of the Bloomberg guys associated with how well, obviously, the Bitcoin ETFs have held up during this bear market, right? Like, I mean, only like 5% of people have sold. I mean, they just keep hammering away. And the point that he was making, and I gotta find it, is that when the gold ETFs came out and then gold took a big dump. Yeah, here it is. Well, no, that's the next one. One of these here. Point being is people rushed. For context, when gold fell 40% a short time frame about 10 years ago, it saw 1/3 of its investors bail. Okay. So 1/3, so 33% of people that were in those ETFs says, forget it. I'm not doing this. Whereas Bitcoin, 5% of people.
5%, yeah.
Now, to be fair, it was a different investing environment now, right? People have been programmed. If you like something and it goes down, put more money in it, put more money in it, put more money in it, put more money in it. But still, it still tells a story, right? It tells a story about the differences. And I think that's compelling, right? The way that mentally how things have changed, the way that things think about them. But at the same time, what are their actions, right? And
technology increases velocity.
Yeah,
markets and everything, money, just name, and we're just on a really steep technological curve right now. AI is accelerating things beyond what anyone could have predicted, and that is going to accelerate digital money and the need for it. Period. The end. Like simple stop there. Robots can't go into a bank branch and open up a bank account. Robots can't write an application out and put a social security number in. And yet agents are paying bills right now. And so, the old legacy way of doing things is changing right before our eyes. And a rising tide floats all ships. So digital currency and things that settle digitally and absolutely in real time, that has to happen. It's the natural evolution of humanity and what we see from a technological perspective. And blockchain is going to change a lot. But all of the blockchains have specific use cases that I think if you wait long enough, you will eventually see adoption. And that goes for even crazy stuff like Litecoin. Do I think Litecoin's ever going to be Litecoin like it was when it was Litecoin? No. But what I mean by that is a lot of people thought it was a better Bitcoin for a long time. That narrative held up. People were mining it. They were making a lot of money mining it. It was the second largest proof of work network. There was a lot of sizzle around it. Well, that narrative died, right? Because it's too much power, and you might as well put it to Bitcoin because Bitcoin is giving you a better value proposition. So it died because the utility wasn't there. But if you took Litecoin and you took it into a public or private entity and you basically did a brute force takeover of the network based upon running enough nodes, you could apply your own application to it and run 51% of the computing power and have an exceptional network that has no cost to run other than the computing power that you have to run it. No operational management costs, all these flexible and all these things, right? So it's just a matter of when a company in the real world, when we see this M&A adoption take place at scale, where every real world company is going, we have to buy blockchain rails, no different than what we're seeing now, but at kind of the highest levels. MasterCard with that, what was it, BVRT or some company?
BMK or something, yeah.
I've never even heard of the company before. They bought them for $1.8 billion for their rails. That is going to be an increased theme, right? So if you think that utility is going to never come to the likes of Litecoin, I think you're wrong. But I just don't know how long the timeline is and whether there's 100 million better plays between now and then. But I still think there's a lot of utility there that will be found.
Yeah, and well, and it happens a lot, in technology, right? Where somebody comes out a bit early with an idea and it doesn't work at the time they come out with it, but then 5-10 years later, all of a sudden, everything is focused on that same idea, right?
Yeah. And XRP, I think I think the disconnect is a lot of XRP people still think it's going to replace Swift.
Yeah.
And I think that's where the disconnect between
what Tillman just described is, and to your point, Chris, of sometimes you're just too early. And then the idea, and sometimes a lot of the rails and even the trademarks and patents end up being part of what happens a decade later. We saw that with the .com bubble. Webvan is what Amazon and Instacart and DoorDash is today. Yeah. When you're like, what do you mean there's going to be a van that comes around and delivers groceries? That kind of feels a little bit creepy. Who would do that? And then now
we all do.
I watched a movie about the Uber launch and how much, how many forces came against them. Can you imagine how many companies got killed before they made it through the gauntlet?
Yeah, for sure. I was around, a couple companies ago, I was in New York basically every week, and I watched taxis go away inside of a year and a half. I watched it go from 90% yellow on any given street to 10% yellow on any given street. And I'm like, oh man. And I remember taking an Uber for the first time, and I'm like, the only way I'll ever take a taxi cab in this town ever again is if there's some sort of the world's coming to an end and it's my only option, right? Because the experience was so radically differently terrible to take a taxi versus taking an Uber. And so by the way,
listen, at the heyday,
and
this is what legislation does to markets. It inflates things artificially. Those taxi medallions were going for $1 million a piece.
That's right. Well, and again, what I just described is what's going to happen over the next 3 to 5 years as traditional finance and crypto become effectively somehow the same thing, like a version of the same thing. You're going to be doing wallet to wallet transactions that will have Fidelity and JP Morgan logos on them in the same way that you were doing Uniswap pump fun wallet to wallet exchanges 4 years ago.
That is a prediction I can absolutely get on board with. That's going to happen sooner rather than later, in my opinion.
Yeah,
they have to.
Yeah. So again, you can be annoyed or worse, just vehemently against the idea of Wall Street and banks, co-opting this technology, or you can make money from it. Which one do you want to do? I mean, I'm probably more of the make money on it type of guy.
Well, you don't ever make money, or you don't really ever live a peaceable life if you're telling the universe what it should do.
Yeah, sure.
Yeah, fall in line, figure out what you should do to catch the flies in the stream. You know what I mean? Like, don't tell the stream it shouldn't be flowing like that. That's a waste of your time. Figure out where the stream's flowing. Go stand in it and catch your food.
Yeah.
This industry is filled with opportunity. I listen. A lot of our employees at Arch are people who started with the simple notion of our software, getting them in at a deep level and then becoming an expert in the software, and then them coming to us going, I've been waiting for a real way to get into the industry. And this is so, like, I encourage everybody, like, once you start looking at this as a big shift in the future, you just start realizing how large of an opportunity there is to go service that industry, to go be a part of it, to go develop in it, literally, there's a million ways to go and support the theme. And I think once you own Bitcoin, I encourage anyone to own a little bit, very small amount, hold it for 4 years, and then find out if anything else you've held for 4 years is done better.
Yeah. It's that's the funny thing is, you don't have arguments. You just see comments of people that when you say, Bitcoin is up 10% in the last whatever, like, well, look at the last 2 years, what happened? I just go cycle to cycle, right? Like, per the store of value argument. If you go back 4 years, and then the 4 years before that, and the 4 years before that, like $300, and then $15,000, and then $45,000. And now everybody's pissed off because we're at $70,000. Like,
if you curve fit any set of data, you can make an argument for anything. I can literally convince you of anything. I can show you why tulips are the best investment in the history of all mankind by taking a segment of that growth curve and showing you that that's going to continue. The reality of it is that it has to have true utility to matter to humanity. And what I think people should be looking at is like the adoption rate of Bitcoin users. More people, we talked about this earlier in the call. It's like, how many people does it appeal to? It appeals to a lot of people on a lot of fronts. And if you just are betting on an adoption rate based upon the fact that we're this shallow in user base right now, that's a massive indicator as to how many people could it be? How deep could the liquidity pool be?
The curve fitting thing has never been more apt in terms of performance, for this, sort of historic quote. I get a good look at a butcher if I put my head up there. You know what I mean? So you're right. You can damn lies, and statistics, right? I mean, that's how it goes.
Liars always figure, but figures never lie. The math behind it is I look at like the hash rate curve, never been higher. I look at the adoption rate curve, never been higher. I look at how many wallets hold more than 0.1 Bitcoin, never been higher. How many wallets hold more than 10 Bitcoin, never been higher. How many wallets hold more than 100 Bitcoin, never been higher. Every metric you can point to tells you that more people are using it, and a deeper liquidity pool is being built. And when you just look at it against the other assets you can own, you're a fool to not want this largest sample size that you can get in terms of data. And you go, okay, 17 years it's been around. network's never gone down. In 17 years, forget the price. The network has never gone down in 17 years. There's never been a network in the history of mankind that's ever done that. That is a first and only drop the mic, exclamation point, MasterCard, Visa, Google, Amazon, you name it, the DOD, Obamacare, every website, every database has failed in real time, and except for Bitcoin. And Bitcoin has done that because it's been ingeniously built to give true utility to the world. And that is what you should be betting on. And price doesn't matter. It's those metrics that matter, in my opinion. But nerd soapbox.
Sorry, guys. I got these two guys with their my lawn guys out there with their blowers. Two of them right outside the door.
That's all right. I had to go offline a couple of times because I was given the greatest piece of tilapia in the history of mankind during this little deal we're doing today. It was absolutely delicious.
Well, that's good. I mean, that sounds like you're eating pretty healthy over there. Are you still?
I am now. To be fair, I was also given a side of mashed potatoes and a side of sourdough bread that she's been curating for a month.
Okay.
She made it.
Sourdough bread is the best type of bread.
Yeah. And if you know anything about Venezuelan women, you probably don't, but I do. Cooking and feeding is a very, very love-focused thing. So whenever she brings me something, I can't just be like, thanks, and then just keep going on. I have to taste it and tell her my thoughts about it, and then she goes about the rest of her day.
I know why you go off camera now.
Yes, that is right.
Because you have to make very effeminate facial expressions like
no, I don't
no,
do that.
That's 100%
I do that with words, not with weird facial expressions.
No, I guarantee you do. I need to see next time this.
You know better. I think that's what we'll say here.
So bringing this back from effeminate facial gestures to food, back to Bitcoin. I think a lot of people got burned though. They burned themselves chasing the next better thing, right? Instead of just focusing on Bitcoin, especially after 2017, right? Remember coming in 2017, everything was the next Bitcoin.
By the way, that's not just a crypto type of, let's call it, phenomenon. The AI thing starts, and instead of just putting a bunch of money into NVIDIA, you're putting your money into 15 different things, 2/3 of which are just garbage and trash.
Look at the treasury company space. I mean, how flash and that was. I mean, it's the only thing you control is how much tilapia.
It's true. Not the only thing, but it is something you can control. It's true.
But yeah, so I think, going forward, again, new people are going to continue to come in, and they're going to continue to come in because you got people out there saying, look, I made $10 billion in the last week on this shitcoin, and it's going to continue.
Those days are gone. Now, can you make a 2x or a 3x like people with Tau have done over the last, let's call it 2 weeks to a month?
Yeah.
Sure, you can double your money. But you can also do that in the stock market, right? Like it's not this non-correlated type of space where, it's the meme coin world and you make 100x in 7 hours because BitBoy told you to do it, right? That world is gone. Sadly, BitBoy is gone. That doesn't exist anymore, and it's not going to. Will we see a world where something like that comes back? Sure. Stuff like this always happens. It happened all the way back in the 1800s with tulips.
Yep.
But it's in the crypto space. Again, we're getting financialized. It is what it is. And for people that are serious and adults, they can take those holdings. And again, the idea that, say, Bitcoin does an average of 30 to 40% over the next 6 years, I mean, that's pretty remarkable stuff, guys. That is pretty remarkable stuff. And
listen, you just understand the laws of compounding. You'll never chase the steep curve again. All you want is the base hit every year. If you can base hit every year, I go back to something you said earlier in the year, Andrew, regarding who's the predictions guy that has his own show that is Kramer. They would shut down, in his book, he said, if they hit their mark for the year, they'd shut it down. No more trading. Why? Well, because it's good enough. You just do that every year and you end up being really happy with the end of the rainbow. You know what I mean?
It is a, you get to 40-41% as a hedge fund. You just call it, you're done. You are done for the year. Absolutely. Because historically, even if the S&P has a unbelievable banner year, it's going to be 17%. Yeah. And you have nearly tripled it, right? So you're done. Forget it. We're done. Shut it off. We'll start again next year. And so again, if you have those types of years, because if we go the next 5 years at 40% average with Bitcoin, that's 200% from where we are today. There'll be 7 people left on Bitcoin crypto Twitter, even though Bitcoin's at $175,000 or $200,000. It'll be, you don't want to talk about a ghost town, but it will have done 40% 5 years in a row to the tune of 200%. And people that are smart will have been like, this is the greatest thing ever. I've made enormous amounts of money. I've allocated into other products associated and adjacent to Bitcoin, and I've been able to take loans out against it and do additional things that have
just the ease of ownership alone. Like if you own silver right now, you know what I'm talking about. You're getting clipped 8 to 10 to 15 to 20% in and out because the brokers control the market. You're paying exorbitant shipping costs. The entry and the exit have tons of friction attached to them. Even the storage has costs attached to it at scale, right? So you have all of these encumbrances to ownership, and then you talk about real estate. Real estate can go up in value over time. It's an inflationary hedge, right? Because we print more money, it goes up. Your parents' house was cheaper than your house. Your kid's house is going to be more expensive than your house. That's the natural progression. But you got to maintain it. You have liability insurance attached to it. You have taxes attached to it. You have all these things that at scale become very large obstacles. Bitcoin, you can have 100 Bitcoin or 0.0000001 sats, and they cost you the same cost of ownership.
Yeah. But see, that's the thing though. And what you said there about, basically you said time and compounding takes care of it, right? The same thing I teach people day in and day out. I said, listen, your only job as a trader is to lock in profits consistently and use proper risk management. It's not to call the top and call the bottom. It's not to ride every dollar the entire way. Is to say, listen, this is a good area for me to get in, to lock in some profit, get back out. And time and compounding are going to do the heavy lifting. But people are funny, right? Human beings are funny. We get addicted, and it's hard not to, right? It's hard to, we all are in markets. It's hard not to get addicted to go, oh, man, I can basically just snap my fingers and make money, right? If only it was quite that easy. But, that's the thought that goes through.
Well, it is that easy when you're lucky, and then you convince yourself you can be lucky a lot, and that's where
well, you convince yourself that you're skillful when that luck hits, right? The person who comes into the market for the very first time and they happen to get a good trade one time, the first time, and they're like, oh my God, I know what I'm doing. This is easy. Dave Portnoy, right? When he was coming in there, he did it publicly. Talked about how great he was. He got that one luck. And
he learned 3 or 4 lessons over the past, 4 years.
Well, how about our boy that lost, $100 million this year? That was crypto famous for about 15 minutes. But what was it?
I forget. See, we've forgotten his name.
I don't even remember his name, and he was literally dominant on Twitter. Remember, he made $100 million in a few trades and then lost it all. And
just like that. And yet, people are out there and keep trying to do it over and over and over again. It's unfortunate because they're just giving their marker in.
Yeah, I think 4 or 5 years ago, the Winklevoss twins went to Dave Portnoy's house and, fully explained Bitcoin to him and told him if he'd have just listened to him then, put, $5 million in Bitcoin, he'd have, I don't know, $20 million in Bitcoin now. And he would have never done anything else that lost him money that was stupid. Now, maybe he would have because sort of in some way, shape, or form, doing dumb stuff and getting attention somehow makes him more money associated with the attention version of his sort of empire. But either way, Bitcoin would have served him well if he'd have just bought a bunch right there and just shut it down. Right.
I think people love to see the collisions. It's the rubbernecking that we like more than anything. It's like BitBoy is the infamous one. He's the kind of the OG or one of them. But like James Wynn was his name. He came from nowhere to 500,000 followers on Twitter this year. I mean, that is a meteoric rise to influence, if you will. And that's an intoxicating. That's almost worth. You want to go. He said this in a few tweets. James did. He goes, "I don't regret anything." I said, "You want to be like, listen, man. If you wanted $500,000 followers, you could have paid like $5,000 for that, not $100 million. I mean, what in the world?"
People that say I don't regret anything deeply regret something. Deeply regret something, and they're trying to convince themselves otherwise.
Exactly. Because if they didn't, they wouldn't say it. That's exactly it. Yeah. So if you're listening, folks, and you're having trouble in markets, or you're just new to markets, take heed. Look for base hits.
That was pretty funny. I heard he had to change his name to James Loss.
Folks.
Well done. Also, by the way, I don't want it to go unnoticed that somebody gave Chris some props. If Chris shut down after getting to 40%, he'd have 50 weeks of free time every year. Yeah, Chris. Yeah, there you go.
We do all right. But a big part of it, again, is just the same thing I preach day in and day out, right? It's limit your losses. And, make those hits over and over again, and time and compounding will take care of whatever you need to do. And you know what? If you've only got a small account to begin with, it'll take you a little bit longer. It is what it is. Deal with it. Where would you be 2 years from now, 5 years from now, 10 years anyway, right? You'd still be working your same job, doing your same thing.
Take the gamble. But there's no crying in the casino.
Oh, everybody cries in the casino. What do you mean none?
No, there's no crying. If you're going to be the gambler that goes for the 10x, the 20x, the 100x, and you go bust on that round of blackjack, there's no crying. You should know, again, what Andrew said earlier, risk is proportionate to reward. And so the more reward you stand to make, the more risk there is in that.
You can't do it any other way.
Myself in Vegas in the next couple months, and if you want to understand how to play blackjack, just stand over my shoulder. Just stand.
Andrew was the epitome of the worst blackjack. If he goes to Vegas, I'm worried. I'm fearing for his life because other blackjack players will literally shank him to get him off the table.
I've gotten a few dirty looks a time or two. Let me tell you.
He's the type of gambler that will hit a 15 with the dealer showing 6. Listen, swear to you. And I'll go, Andrew, please, no, please, God, no, please. And he'll go. I feel it. It's a fool.
I channel my BitBoy energy at the blackjack table. All right.
Listen, he won a bunch of money right in front of me, and that's why I said this is the epitome of the age-old bad traders making money leave a lot of lost money.
It reminded me. I don't know if you guys have watched the show Industry. You probably shouldn't. It's pretty morally reprobate. But either way, it's a fairly popular show. And there's one episode in season 3, I think, where one of the high-level wheeling and dealing traders on the trading floor for the bank is, just absolutely levered like crazy on a position to the tune of almost $4 billion. So his book plus somebody else's book plus somebody else's book, which was completely not allowed on the pound. And ultimately in that show, some political thing came out and he ended up going from a massive loss where he was, they were going to take him to jail from the floor, to actually winning, not a huge win, but winning to the tune of $15-30 million. And the guy sitting next to him said, "You're not even a good, just looking at him with awe, you're not even a good trader. You're just lucky." And he said, "What's the difference?"
Oh man!
Listen, if you get off the ride when you're at the top, you can't argue it. You know what I mean? If somebody is good enough to be extremely lucky and then stop pressing it, that's a rare breed, but it also is indicative of it not being so much luck as it is.
To be fair, God knows whatever my theory was on that blackjack table, but I walked away with money. You saw me. I walked away with some cash. Don't knock it till you try it, my friend.
This is coming from somebody who will also walk up to the craps table and put money on all the sucker.
Yeah.
Hard 8, all of them, and you're just like, what? Not how you play.
I think that's how I play.
Yeah. Well, listen, but the point is that the casino is there's a lot of flavors of ice cream, and the market is. We said this a year ago, like at the very beginning of the show. The industry where we are now, even where we are now, is like 3 varieties of slot machines, and everybody's going to Vegas, and we're all sitting around going, "Man, this is fun. This is awesome. I'm winning some, I'm losing some." Well, Vegas hadn't even been built yet, guys. I mean, we're about to see every variety, every version of Bitcoin representation or allocation or exposure that you could possibly fathom. And it's because it's really good collateral. Really good collateral.
Yeah.
There you go. Famous last words there. All right. Hey, listen, we are going to get out of here. I always appreciate you guys joining in, sharing your thoughts, your experience, your wisdom, and your movie lines and TV show lines and whatnot. Hey, listen. So again, if you're new, first of all, thank you for finding us. Second of all, listen. I mean, it is what it is. You're going to do what you're going to do. But I think if you can really pay attention and listen to what we're really saying deep down, I think it's only bound to help you. And when it comes to markets, stop swinging for the fences every time you're out there. Make it a habit to make, base hits. It's a lot easier. It's a lot less stressful. And you just let time and compounding do the rest for you. So whether you're learning to trade through TWC or you're over there using the algos over there with Andrew and Tillman over at Arch Public, just stop trying to get everything in one shot because that's what's killing you. So there you go. As always, remember, the only thing Tillman can control is his little tagline under his name there. Y'all have a great week. Trade safe. We'll see you next week.
That is the first show we never ended on. I love it. We win, Andrew.
Take care.
We retire. It's over. Listen.
See you guys.